Hi, everyone. Welcome to another KE Report webinar featured or presented in conjunction with Focus Communications. In this webinar, I am featuring Trigon Metals. We're going to be talking about a feasibility study that was just released to the market on the Asis West underground mine, an operations update and look ahead, as well as a new project acquisition and spin out of the Moroccan assets. I am joined by Jed Richardson, CEO and Executive Chairman of Trigon Metals. Trigon is traded on the TSX Venture Exchange under the symbol TM and on the OTCQB under the symbol PNTZF and on the Frankfurt Exchange under that symbol TZU2. My name is Corey Fleck. I am your host for this webinar, also your host over at the KE Report podcast website, as well as radio show down in the US. We're going to let Jed run through this presentation here, outlining some of the recent key catalysts for the companies, as well as answer some of your questions. Please send in your questions through this webinar platform, through either the question and answer function or simply through the chat. I will be monitoring that and also introducing or interjecting some of those questions throughout the webinar. If any of you are having technical issues, please use that chat function. I'll try to help you through that. Jed, thank you very much for joining us. I'm looking forward to this webinar to get an update on Trigon and the operations, as well as some of the recent news that has come out. So Jed, thank you very much for joining us. Please take us away.
All right. Thanks a lot, Corey. Okay, well, let's get into it. I'm right now looking at my screen today, and I'm watching a really big move in copper. I'm looking at COMEX price 419, and this is a copper story. This is this would be a great way to play a move in copper. We are sitting at low share price right now, tiny market capitalization. And as I get into the story, you can see all of the value that's sitting here. I'll note that our largest shareholder is Eric Sprott. Management board own around 5% of the company, and we're all kind of in this together, where we are looking at the value. We want to see the share price move, and that's our focus as a management team, and really all the way through the organization. The key asset and thing that we're focused on is the Kombat mine. For those of you who listened to these calls before, the Kombat mine is a operation that was there for 45 years. A lot of infrastructure, and I'll get into some of that. But that is the head start. Having all of that history, all of that infrastructure in place is really what gave us an opportunity to bring this mine into production, and we're taking advantage of that now. We are now shipping our concentrate out through very good roads in Namibia to our port of Walfish Bay, with that concentrate being shipped right now to smelters in China. But I'd say the value that we're seeing in the market really does not accurately represent who we are as a company. There's a lot of value here, like the infrastructure alone, over $150 million. We just completed our feasibility study with SRK, and that just scratches the surface of what this operation will be, and it shows a phenomenal return from today's values. So we're looking at a net present value of over $116 million, which is about, that's US dollars, so about 5 times our share price right now. And we can do so that, and in that investment, we have a outstanding internal rate of return over 285%. And this is just looking at the first 6 years of mining from our underground. That we have a resource that extends well beyond that 6 years. In fact, we have over 10 years from the main ore body with a whole new ore body to define on top of that. So a lot of value is just not being realized right now by investors, and I think that has to change. It can't stay like this. But I do want to go into some of the so people can kind of understand what they're looking at when they're looking at these at the study. First of all, over the entire 6-year mine life, we have a capital expenditure of $40 million, but there's only about $8 million of that's upfront to realize the expansion that we have planned. Our operating cost life of mine is around $2.19, which is in line with our expectations as we got into underground mining, and we can see that that this is going to be really profitable, especially looking at a copper price today of $4.20. Also, we just kind of looking at what was converted into reserves. The 6 years of reserve life is just what's been mapped out with a detailed kind of month-by-month mine plan for mining. Like I said, we have over 10 years of resource. In fact, the resource increased in this study, and you can see the grades that we're seeing. So we were expecting a grade of 2.6%. Instead, we're looking at over 3% in the underground. So really great recoveries as well. Recovery at over 93%, and then good recoveries for silver. So I'd say a stellar operation, a great investment opportunity. We're actually already mining. Like this is de-risked. We've just completed our second quarter of production, initially from the open pit, but we started underground mining as well, and now we're moving forward on that, and we'll have lower operating costs, higher profits, and more cash flow, all coming up in the coming quarters.
Jed, can we dive a little bit more into that? Because so much of the economics here are driven by this underground mine. And I think we were all watching as you were working on the open pit, but the underground is what drives these economics. So will we see some of this some of this financial data flow through to the financials in Q1 of this year? Will it come in Q2 that we currently just moved into?
Okay. So we'll see only the beginnings of contribution in the quarter just completed, but you'll definitely see it in the grade increase. We've looking into so through April and through this quarter, what we're looking to do is be half and half, so half open pit, half underground, and this coming quarter is where we're going to see the full impact of that. I don't have the stats in front of me, but I think we did about 7,000 tons of underground ore in the previous quarter, with most of that coming in March. Going into April, we now have a mine plan that'll be 15,000 tons of underground ore in the month of April and each of the months following. So you'll really see the impact of it in the coming quarter. But already we got a taste of it. So we can see the recoveries. We can see the benefit of the grade already over the past few weeks, and we'll be able to really feel it in the financials in the coming quarter.
Okay, so that transition is happening. I guess this slide also ties into what the forecasts are, what the ramp up looks like. Take us through that, please.
Right. So here we are in pounds of copper, and that's the line graph on the upper left corner. And so when we see 2025, we're on March 31st year end. So 2025 is actually now. And so that 12 million pounds of copper is what we're forecasting to produce this year, 12.5 million tons. And that's with half open pit, half underground. Going into 2026, which is really next year, by then we will have an expansion of our production. So where we are now 15,000 tons of open pit, 15,000 tons of underground, we are looking to be 30,000 tons of open pit, 30,000 tons of underground come next year, once we expand our mill from 1,000 tons per day to 2,000 tons per day, or 60,000 tons a month. Then you see the darkened area above. This is the contribution of Asis Far West. And the important thing is when you're looking at the feasibility study completed by SRK, that does not include Asis Far West. And Asis Far West is a huge part of the investment thesis at Trigon. That this growth with the infrastructure already in place is where a lot of new production is coming from. A huge amount of cash flow will be generated, and that is still to be realized. So from today's share price, you have a 5x return just to get to this shaded yellow, the shaded peach here at the bottom. Beyond the Asis Far West sits over and beyond that. So a lot of growth is a big part of the story.
So make a little bit more sense of that, though, Jed. The underground, the Asis West, you're into that right now, but Asis Far West comes this year, or is that all part of Asis West?
So that's coming next year, and it is not. It's another section of the mine. I'm gonna just answer your question here. So Asis West. So we've been mining in the open pit the last 2 quarters. We just started mining in Asis West, in and around Shaft 1. Asis Far West is this head frame over to the where am I?
On the left-hand side there.
To the west, to the left-hand side of the slide. So this is a 800-meter, 2,000 ton per day head frame that was put in actually by Goldfields, our predecessor. This piece of infrastructure in itself is worth over $150 million. It's the largest head frame in Namibia, and the mineralization extends well beyond where we are here, where our resource is, all the way through this area and beyond the end of this page. And I'll go into that in another slide. So that is the new growth, and we're looking for that to start contributing towards the end of 2025.
Okay, thank you.
So let's see if I can jump back. So,
thank you, everyone, for all the questions. We'll keep getting to them, but I'll let Jed run through a little bit more of this right now.
So yeah, I can actually see some of your questions when you're throwing them into the chat, and one of the things is about the life expectancy of the mine. So yes. On that resource of 6 years, that just looks at this portion here that's been upgraded into reserve. And from an underground mine, you can understand a portion can be raised into reserve, but there's actually a lot more resource. So we have a resource of like underground 10.4 million tons at over 2% copper. That whereas that we will mine over a mine life of in excess of 10 years. And this is actually all just the Asis West area. Then in Asis Far West, we have an ability to increase that resource well beyond that. In fact, I think it'll be it will more than double the resource when we get into Asis Far West, and I can give you a little bit of reasoning why. So this area here between Asis West and the open pit, 12.5 million tons was mined here over the 45-year history, and we still have 10.5 million tons of mineralization here. So that's just 2.1 kilometers. We have another mineralized area of another 2.1 kilometers headed to the west here that we're going to be building the resource in, and that will be and I think to look at the 12.5 plus 10 that was mined in this area, I think there's real potential that we have that same level of mineralization through Asis West. So in excess of over 20 million tons at over 2.5 to maybe 3% copper. So it's a great piece of infrastructure to have, that we've already got all of the development into this new area. Now, some of you who've been following along and know the story well, you know that we are dewatering this mine as we started mining. The dewatering is actually going really well. We are down to level 9. I can't, let's see if I can draw here. Yeah.
You want me to fire up the whiteboard for you?
Oh, here we go. So level 9 is in here. So we've dewatered to this level already, and the water's dropping at a pretty fantastic rate right now. I think we went down another 10 meters this week, and we're getting to a point where we can start to reestablish some things like the underground pump station. We are mining up here. Let's see if I can do it. Yeah, still in this area. So level 1, level 1, and level 3. So we'll be we're the dewatering is going very well, and we'll continue dewatering. We have resources just in this top section to last us well into next year. But we'll be dewatering into the lower. We'll continue dewatering over the life of the mine as we move into the deeper areas.
And this is the more economic material, right? In this area where you are dewatering, where you continue to move deeper.
Yeah, indeed. Okay. So again, just on what we're talking about, just Asis West and the 6-year mine life, and the couple of years of the open pit that we have planned, we've got a lot of value. We've got a 5x return getting to the SRK net present value. Also, compared to our peers, we have a big return just catching up to them as far as enterprise value per pound of copper production, or enterprise value per pound of measured and indicated resource. And we're doing so with a lot of growth ahead of us. There's not a lot of peers right now. You know, at a day when copper is $4.20, there's not a lot of ways to play emerging copper production. You know, generally in mining investing, you know, looking at that old Lassonde curve, this is a point where you make outstanding returns in that turn from resource development to production, and also for these companies that are like the mid-tier the space, whereas the large established companies tend to truck along, and they definitely do have their share price appreciation. Extraordinary returns can be made for the asset developers like Trigon.
Well, especially through the growth of production and cash flow, because right here you're outlining some cash flow. We've had a number of questions already come in asking about cost to expand the mill. Where's that money coming from? This is starting to outline it. Can you take us through how much could potentially be internally funded?
Okay, so we're working on a working capital facility to give us the capital to do this expansion. So we're working on that with our off-taker. We will be generating more cash flow, particularly given today's copper price. And with that, we should be able to fund most of this. Now, as far as equity capital, which I think is where most people are looking at it, we may look at some equity, particularly when we're considering this Asis Far West expansion. But we don't want to be doing that at today's share prices.
Okay, so you will need some financing facility. It won't be able to be done all internally then.
No, it won't be all internally. Internally. But like I said, but we're really fortunate. So we're in a position where we do not have any debt. Now, just talking about Asis Far West and why this is so important, and really speaking to that, to my hypothesis that there's an ability there, that we have the ability to bring on another 20 million tons, is these are some historic drill holes around Asis Far West. So right around the base of that shaft, there's been a little bit of development, and you can see holes like 10 meters at 4.5% copper, 6 meters 3.6% copper, 8 meters at 6% copper. About 500 meters to the east of that of the shaft. So this is going back towards the main mine. We have an amazing hole, 5 meters at 15.6% copper, 325.6 grams per ton silver. Really rich mineralization. Then 2.5 kilometers in the other direction, here's a hole 13 meters at 2% copper. So you can see that the resource extends, and this is where we're going. So beyond what's happening in and around the mine, and if you're looking at the chart, you see the outlined yellow. That's where our whole resource is, and that's actually where the growth is going from. The growth from Asis Far West is all contained in that white outlined area. We control the whole valley, so that's 35 kilometers of strike length, and all throughout that, you can see the red stars are at surface copper mineralization, and this is where we think we can grow the asset even beyond the current production level.
Now, what sort of work do you need to do here? How much drilling are you planning? What work are you doing to extend the mine life?
Right. So right now the focus of the drilling is actually more underground. We still do have our at surface rigs, which are drilling in and around the open pit, but we've just launched a whole program that is going to be doing really surface sampling through the entire belt, and then we'll be following that up quickly with drilling. We've already got the makings of a resource around the Gross Atavi area, ML73C, if you're looking at it. And then in the extreme east, you see those 3 stars at Schlangenthal. That is, sorry, the area we call it Schlangenthal. That is, we've done a drill hole in that area, and that's come back with some really impressive mineralization. So we're steadily drilling there. Right now, it's at a rate of about 1,500 meters per month. but that'll pick up after we do that sampling program. So just mindful of time here. In I believe November, we announced the acquisition of the Kalahari copper project, which closed just the week before last. That gave us a really large land position, also in Namibia. So if you look at the shaded blue area, that is the second largest land position in Namibia, beside the shaded green, which is Rio Tinto. This is where explosive upside can come exploration-wise for us at Trigon. On the Botswana side, we've already had the Kombat project, which was sold, the red area, which was sold in November for over $2 billion to MMG. And then we have Sandfire with the shaded yellow. And Sandfire enjoys about $2 billion of market capitalization based on their exploration here on this belt. This belt of rocks is the same belt of rocks that extends undercover all the way through into Congo and has the likes of Ivanhoe's big copper project on it. This is the type of geology where you get massive projects, massive deposits, and we're really fortunate to be able to grab a piece here. Now we will finance this slowly in the background. There's no plan to do a big drill program here, but it matches nicely with the cash flow growth from Kombat, and we'll use that to develop the Kalahari project here. We've got a lot of the work here is going to be geophysics for the time being before we suss out some targets. But it, like I said, it matches well with the cash flow from Kombat, and we can and as the cash flow starts to spit out, then we can ramp up work at Kalahari.
Okay, there were a number of questions that came in asking why acquire it if you still need money for the expansion, but sounds like you're not going hard after this right now. You're going to wait, build up some cash through operations, and then start to explore here.
Exactly. No, okay. It was an opportunity for us to grab a project like this. And then you will note that we are spinning out our Moroccan assets over the next few months, and in a lot of ways, the Kalahari project replaces the Moroccan assets at a time, at a that can move at a pace along with the mine.
Just real quick on that acquisition there, that there were some shares, I believe, that were given in exchange for that asset. Do you think those have been coming into the market, providing some of that selling pressure?
There is some of that. Most of the shares were actually with the went to the management team that have come in to really bolster our bench strength. So our new president and COO, Rennie Morkel, Grant Saboros, who provides a lot of technical strength on our board, and Andy Rumpel, our new VPX. However, there were a small amount of shares that went to some disinterested parties that were part of arranging the package, and yeah, no, I do think that's where some of the selling came from.
Okay, thank you.
But okay, let's touch quickly on Morocco. So we have a shareholder vote April 9th. In that, we are voting to spin out the Moroccan assets. There's a pre-money valuation of about $5 million on that. So that would be an instant. So at today's price, an instant 30, almost 5 cents a share. So yeah, an instant kind of 5 cents a share boost for current holders. The Moroccan assets, I think it's going to be an instant boost for shareholders. You'll get a half share in Safi Silver for each share that you have in Trigon, and like I said, it'll have a pre-money valuation of about $5 million. It should provide about I think it's a 5-cent lift for each of you.
Now, is this an RTO or a direct list?
So it is. So initially it'll be private, but we will use an RTO process to bring it back to trading pretty quickly.
Okay, so you are going to bring that into trading quickly then,
Absolutely.
Not just sit it private for a while. Okay,
it will not stay private for a long time.
Okay.
And just a refresher, we have 2 projects, Silver Hill and Adena. We've done a lot of work at Silver Hill that's already shown its merit. We're next door to Aya Gold and Silver's Boumadine project, and then Adena, we have a huge area that with some really high grade material. So we're currently getting no value for this in Trigon. So as a separate company, you'll start to see some value for what we're doing here. So look at results: 14 meters, 1.1% copper, 74 grams per ton silver; 8 meters, 1.8% copper, 121 grams per ton silver; and then 2 kilometers away, 13 meters, 2.7% copper, 34.5 grams silver with a little bit of cobalt that came with it. Then at Adena, even bigger area. So compared to the 4 kilometers of strike length at Silver Hill, we have 40 kilometers at Adena, with grab samples, 564 grams per ton silver, 25% lead, 5% zinc, and in our handheld analysis, we're seeing copper and cobalt and germanium all coming in these rich veins. So we want to start recognizing some of that value, and by spinning it out, we think we can do that.
Have you been doing any recent work here? Someone's asking if there have been any new drill results from Silver Hill.
No. Oh, sorry. At Silver Hill, we have done some more recent work. We did some drilling to the south, and we got only kind of interesting drill results. But since we added our new VPX, he's now modeled it out and thinks where we're actually heading is further along strike. So we've got a whole new work program planned at Silver Hill, and then we've also found an adjacent vein that's on a ridge to the south of us that we are now following up on. We're on application here to increase our land position pretty dramatically, because we're following mineralization now over like a 14-kilometer strike.
Okay. So again, though, these need to be spun out first and then listed, and then some work sounds like will be done. Some more work will be done on them.
Yes, definitely.
Okay.
It needs real capital now, and we don't want to dilute the Trigon story by raising capital for Morocco.
Yeah, and I don't want to spend too much time on these because this is going to be going into another company too, right? Trigon is about production right now and growth of production.
Absolutely. So our vote on this is April 9th, so that's next Tuesday. If you're a current shareholder, you can vote right now, but we have not picked a date of record yet, and that's to be honest, that is kind of strategic, so you still have an opportunity as a new shareholder of Trigon to benefit from the Safi Silver spinout.
Okay, thank you.
Okay, so that is the bulk of what I wanted to get through.
Okay. We have a number of questions that we can
Please,
get through
yes, I
then.
figured that was where
Let
we were.
me fire these up for you here, Jed.
Sure.
I will fire up my camera as well. So,
Okay.
first and foremost, talking about the open grade and profitability. What were the factors which the PFS attributed to a $3.60 per pound cost? And what factors are different, in your opinion, that can lead to a lower cost here?
Sure. So in the first quarter, it was $3.96, and it was around the startup. We had a fantastic October where in fact operating costs were closer to $3 a pound. In and we in October, October. In November, we had some equipment issues from our mining contractor that did not, where they had one of their shovels go down. We were actually able to maintain production through stockpiles, but come December, we had a lot of lower grade material that was put on the raw pile as they were kind of scrambling to make up tons. What we've been able to do is really just improve controls with our mine contractor, so that we can so that we have a better control over what's going on the pad, regardless of what their situation is ton wise, so that we can we can maintain a minimum grade through the mill. This is the whole operation is very sensitive to grade, and just to put that in context, that is literally the dollars of rock, the dollar value of the rock that's being put through the mill. The best mitigation that we have, though, has been the underground. Now that we've got the underground, we are it is owner operated. So this is our team that's underground. That's not a contractor. The other, it's much higher grade, so we can make sure that the grade going through the mill is always is elevated, and we're always profitable. So we'll see operating costs drop pretty quickly, and you can see that even it's kind of slow, but you can even see that in the study. So I'm not going to go through all of it. In the study, that the open pit versus the underground operating costs are dramatically lower.
Okay. How variable is the grade then from the open pit or even in the underground? Underground might be hard because you're just getting into it, but have you noticed a lot of variability in grade?
There is variability. So we do get pockets that are upwards of like 4%. And then we will mine as low as 1.5 from the underground. So we do have some stopes even in this next quarter that are going to be like 1.8, 1.9% copper. But then that is balanced out by balanced out to an average of around 3%. So you get variability in the ore, but we've got a pretty good handle on where our grade is, and we can keep an average grade coming through the mill.
Okay. One other question then. What about the mine costs as you progress into 2026, 2027? It shows that those get significantly lower. Is that due to everything being in place, higher grades? What leads to these lower mine costs?
It's the higher grade. It's the higher grade. Okay. And really it's just that.
Okay. Also noted that the resource contains a lot of lead. Does this lead contribute to the economic results in any way?
So not in our study. We've ignored it there. There will be periods where it does. So we have enough float cell capacity to at times make a lead concentrate. Generally, we actually suppress the lead in the plant because the lead recovering the lead actually sometimes hurts our copper production. That lead actually floats easier than copper, and some of the copper will start reporting to the lead cells, and in that circumstance, we don't get paid for it. We balance that though, in that too much lead in our copper concentrate is a penalty. So when the lead is very high, we'll produce a lead concentrate, and we can make a little bit of money off of it, but it's actually more preferable to be just producing a copper con.
Okay, that makes a lot of sense. Let's talk about some of the exploration and growth side then. When it comes to Asis Far West, someone noted that there's a PEA upcoming. Any more color that we can get on how that's shaping up?
Yeah. In our study for Asis West, it took a lot longer than we had planned. And I say that in preface because we are working on the PEA for Asis Far West, but I'm not ready to make any predictions on when it's going to come out. The key thing there is getting an idea of what the capital costs are going to be for that work. We continue to work with SRK, and we've been happy with their work. It's just been a slow process. So hopefully we'll see numbers soon. But I'm not even ready to tell you what soon is.
Okay, so no time frame at all. Yes. Then it's coming, but you're not saying when at all.
Yes.
What about? Is there any mineralization east of the open pit or the number 3 shaft along that Kombat trend? We've talked so much about the west. What about the east?
Absolutely. So we call it Asis Ost or east, if depending on how much Afrikaans you know. But yeah, we do see mineralization continuing to the east. That is kind of a priority one. Drill target as well. If you'll notice in the study, it shows just an open pit mine life of about 2.5 years. The east is where we see an ability to extend the open pit.
Okay, but that's not coming right now. The focus is more on the west right now.
We will see some drill results through this year that are from the east, though.
Okay.
Yeah.
Now, are you funding that drilling with cash flow here? A lot of people are still asking about cash in the bank. And look, we already went over how you're looking at some financing facility to expand the mill. But just talk to us about cash maintenance then, in terms of what's coming in and what's going out.
Sure. So we've still been investing on getting underground. So we've already reported like a small operating profit, but we're not cash flow positive yet. We will start building cash towards the end of this year. As far as cash maintenance, we have slowed some of the at surface drilling just because the underground's been higher priority. But the work continues. The work continues drill wise. There's still more than 2,000 meters of drilling that's happening every month between open pit and underground. We're still moving forward, kind of gangbusters on the expansion. Cash wise, we do have a lot in working capital because we've got pretty high inventories right now. We're shipping concentrate daily and turning that into cash as quick quickly as we can. But I think kind of what the market or what the questions are really pointing towards is our requirement to raise capital. Are we coming back to the market to raise capital? And I guess the pause says it all. The first step is is our working capital facility. And really, it will be copper price that determines if we need the additional capital for the expansion. The expansion is something we can put off, but it's an important part of the story. I don't want to postpone expansion inevitably. I mean forever. It really does move the needle as far as cash flow. I want a stronger share price before we do anything like that, though.
How much does the copper price play into this? Because you also noted, and I think we've all been watching copper break above $4, move even higher today. Yep. How much does that make you step on that gas pedal for expansion?
Less makes me step on that gas pedal. It more gives me solace that I may not need to come to the market. That's what I'm looking at that copper price for.
Okay. And when it comes to production and how you're turning that around into cash, can you give us an estimate on what type of prices you're getting for the concentrate that you ship off?
Yeah. So we're getting spot prices for the copper that we're shipping. We use like a month average. So I wouldn't be able to say, today it's 420. Let's book a bunch of shares, a bunch of sales today at 420. I get a month average. So like our most recent invoice was at $3.99. And then, looking at April, as long as provided this holds up, we should be able to book at a higher price. But what is really meaningful is if we look at that 12.5 million tons that we should produce this year, if we should have around $2.60 operating costs. Every 20 cents that like we've added over the last week or so on copper, every 20 cents is turning into, because I can do math quickly, it's 5%, about at least. It's almost $3 million, right? So it's a pretty meaningful what that how that trickles down into our own ability to finance things going forward.
Okay, let's also talk about Kalahari again, because still a lot of questions coming in. Some people asking, why acquire Kalahari if you still have all these expenses and growth at the Kombat mine generally? Also a question saying, isn't there a minimum spend of $2 million to keep Kalahari in terms of exploration expenditures? Just reiterate the strategy around bringing in Kalahari and, as you outlined, not aggressively going after it, but keeping it as future growth potential.
Right. You're kind of answering the questions there, but there is a minimum spend. It is over a couple of years. It's not an amount that is meaningful as far as impacting Kombat over the near term. Where it lines up well is as our cash flow really starts picking up towards the end of into next year, then we've got a project in country that we can start to spend a little bit on. Where the real spend is going to be in Kalahari is probably more than like closer to 3 years from now, and at that point we'll be sitting on an asset that's producing about 65 million pounds of copper annually. At $2 operating costs, if copper does nothing, that's 120 million in EBITDA, and that should closely approximate our cash flow at that time. Having a project that we can invest in at that point is going to be key, and we are able to kind of grab a commanding land position now, setting us up for that period. Like this, we want to build a growing company here. We've got an amazing asset in Kombat to grow from, but Kalahari is an opportunity to have the type of project that a BHP or a Rio Tinto might be interested in, and we were able to grab it now before copper goes crazy.
Okay, this ties into kind of a bigger question that I was saving for more the end of this webinar. And that question asked, what is Trigon's plan for the future? Next 3 to 5 years with positive free cash flow. Building in Asis Far West, is that a priority? What sort of sustaining capital, growth capital do you need when you're up to that, I believe, 30,000 tons per month? Take us through this big picture, growth out, let's say 5 years with potentially all that positive free cash flow.
Right. Yeah. Like, personally, I think we've got a really big opportunity on a couple of fronts. One is what's happening in copper. We're seeing copper price rise. I think it's going to be a long and sustained growth. I didn't go into it in the presentation, but and a lot of you watching will understand that copper is important in this whole electric vehicle transition. There's going to be a lot of demand for copper for transportation, but we also need a huge amount of copper for infrastructure. All of the grids around the developed world need to be updated. Like we do not have an electric grid that can support us plugging our cars in every night, and we're going to need a lot of copper for that as well. Beyond that, even this splitting of the world is what I call it. What's happening geopolitically? If the Western world is gonna go back to producing stuff again, there's a whole lot of investment that needs to go, and there's no machine, no robot, no even plumbing system that is built around the world without copper. Right? We need a lot of copper. This is very similar to the circumstance that we were in the early 2000s, and that sustained strong metal prices built a lot of the companies that we look at as majors now. And I think that's an opportunity for Trigon. That Trigon could be a new First Quantum, where we build around the Kombat mine. We look at the assets that we've got. We've got a lot of opportunities in our neighborhood, in Namibia, in Botswana, in Zambia. We've now built an amazing team. I didn't get to go into it, but adding Rennie Morkel, he was involved in the building of the Katanga mine. He built the USEB uranium mine, one of the largest uranium mines in the world, in Namibia. He's ex-Anglo-American, and also built gold operations in Cote d'Ivoire. This is a really experienced operator that we've got as part of the team. Also, Fanny Mueller, who put the mine into production, also ex-Anglo engineer, worked in base metals and in coal. these skills are hard to come by now. Like they're, just the way the world's developed, not a lot of young people have gone into the mining industry. And as a result, there's not many people who can do what we're doing at Trigon. I'm 48 years old, but all of my team is younger than me, right? Like this is a young, dynamic team that can build a lasting company. I think Trigon is a company you should put in your portfolio, build your position over time, and laugh about with your kids when you're looking at shares that are in the $10-20 range, because we've built a lasting company. So yeah, there's a five-year view. We're practical, of course. We are practical. If someone shows up tomorrow with a $2 share bid, I will listen, right?
Okay. But more than a 5-year view there. Hey, though, yeah. Wait, maybe it'll get up to that $20 level. We will see.
Exactly.
Hey, it's been very interesting. All the questions that have come in. Thank you, everyone, for sending in your questions. I have a few more of these questions saved. I will follow up with Jed to schedule a couple interviews where we simply answer all your questions. You can always email me your questions at my email address at the KE Report. That is Fleck, FLECK, at KEReport.com. And Jed, thank you very much for sharing the outlook for this company. There's a lot of growth on tap and a lot of different areas of growth heading out a number of years. I know everyone's focused on cash flow right now, and we'll be able to start seeing some of those reports in the financials coming up throughout this year. So Jed, again, thank you very much, everyone. Thank you very much for tuning in to this webinar.
Okay, thanks, Corey.